Everyone's talking about 2026 tech stocks. I'm about to walk you through the 10 names that matter and why you should be watching them. From AI leaders to long-term growth plays, here's the reality on each one. Let's start with NVDA, the company that defines the AI hardware revolution. In early 2026, NVIDIA secured a major multi-year partnership with Meta Platforms, where NVIDIA's GPUs and CPUs are being deployed at massive scale for AI workloads. This reinforces NVIDIA's dominance in data center AI infrastructure. Despite competition, NVIDIA's leadership in custom AI silicon and data center partnerships keeps it at the center of the AI boom. Analysts still see it as the default pick for exposure to AI compute demand. Next up, Meta. Meta has had a turbulent ride, but there's a reason it's on this list. In Q4 2025, Meta beat earnings expectations with strong revenue, and its stock climbed as investors weigh its massive AI spending. Then the stock gave back all the gains and then some. Days later, Meta is forecasting $115 to $135 billion in spending for 2026 as it builds out generative AI tools across its platforms and invests heavily in future infrastructure. That aggressive spending could go either way, pressure margins or build future competitive advantage, but it's exactly the kind of structural shift long-term investors watch closely. Let's talk Amazon. Amazon's story in 2026 is a bit of a balancing act. The company's stock showed weakness recently as markets reacted to a massive $200 billion capital spending plan for AI, robotics, cloud, and infrastructure. That raised investor concerns about profitability, but it also means AWS and AI-related initiatives could power future growth. Wall Street still sees Amazon's Prime and AWS value proposition as extremely strong, especially if global Prime expansion and cloud growth continue to accelerate. Next stock to watch, Alphabet, Google. Google isn't just a search company anymore. It's a major AI player. Alphabet is expected to significantly increase its capital spending in 2026 to support AI and data center growth, possibly up 50% year over year. That means more investment in cloud infrastructure and Google's Gemini AI model. Even with heavy spending, long-term investors watch Google because it still monetizes search, cloud, and AI across massive platforms like Gmail and YouTube. Next up, we have Apple. Apple's performance hasn't led the AI headlines like NVIDIA or Meta, but it's a massive installed base with a powerful ecosystem. In 2026, Apple's AI integrations, particularly with Siri and services, could be a big driver of future monetization. At the same time, Apple continues significant share buybacks, which supports long-term investor confidence as other tech giants pull back from buybacks due to heavy AI spending. Let's talk Broadcom. Broadcom is a somewhat under-the-radar AI play, but a strong one. Instead of competing head-on with general-purpose GPUs, Broadcom specializes in custom AI accelerators designed for specific workloads. These chips are in demand from cloud and hyperscale customers, and Broadcom's AI revenue has been expanding quickly, with analysts projecting further acceleration. In fact, over the past 2 years, Broadcom returned one of the best performances among big tech names, even outpacing NVIDIA recently. Next, SOFI. Shifting out of pure tech and into fintech, SOFI stands out because it's scaling its financial services platform and customer base. Analysts see strong revenue growth and increasing profitability potential heading into 2026. For anyone bullish on fintech adoption and digital banking, SOFI offers growth exposure outside of pure AI infrastructure. Another to watch is ServiceNow. ServiceNow is emerging as an enterprise AI workflow play. Some forecasts suggested ServiceNow could match or even exceed enterprise software rivals by early 2026, driven by strong adoption of its automation and AI tools. Analysts see upside for ServiceNow that could outpace other software names due to its focus on productivity and business process automation. This makes ServiceNow a stock tech investor's watch when AI is about more than just chips. It's about real business utility. Next, Palantir. Palantir's story is dramatic. It saw a significant correction in 2026, but that hasn't scared off all investors. In fact, some Wall Street analysts turned bullish on Palantir after its valuation became more attractive relative to growth prospects. Commercial revenue in Palantir's business is growing fast, and government contracts continue to expand. For long-term investors, Palantir is a high-risk, high-reward position tied deeply into enterprise AI adoption at scale. Last on the list, AMD. AMD is a semi-competitive alternative to NVDA in AI chips and data center silicon. Analysts have raised price targets for AMD based on strong partnerships and product demand in server and AI workloads. While it's still behind NVIDIA in sheer market share, AMD's growth prospects in 2026 are driven by new GPU launches and expanding share in data center customers. This makes AMD a stock many investors watch for AI exposure with potentially larger relative upside. So what ties all of these together? In 2026, AI spending is driving the market. Tech giants are pouring hundreds of billions into AI infrastructure, cloud services, and data centers, and that's reshaping valuations and investor expectations across the entire sector. Whether you like hardware builders like NVIDIA and AMD, platform plays like Google and Meta, or enterprise and fintech stories like ServiceNow and SOFI, these are 10 names worth watching as the AI cycle grows.